How are we doing today? Thank goodness it's Friday, right? July 24th, 2020. Give me a knock if you can hear me, or a couple of them if you can hear and see me. Everything should be going good today, though. I've got a good feeling on the technology god shining upon us right now. Yes, absolutely. I am seeing a couple questions about the playback of the roundtable. That is going to be available. Should be available already. Thank you for the knocks there. Should be available already. You should also get an email about that as well, with a link that'll take you right there. We had a good time, talked about some earnings plays, got a lot deeper in the woods on earnings and some other things. It was a good time, I think, had by all. I like doing the roundtables. It lets me get a little more questions and answers. And speaking of questions and answers, use the Q&A tab this morning, guys, because I want to get to a lot of questions. I've got to keep it kind of short. I need to do a little bit of some recommendations right as the market opens here for my night trader people. So we're going to get off at about 9:17. Going to say about 9:17, somewhere between 9:17 and 9:15. But we got a lot to talk about. So I am going to go straight to the screens here. And we're going to look at first the chart, but we're not. Futures. What's going on with futures right now? NASDAQ's trading down lower, more than 100 points right now. When you look at it according to or balancing it off future value, obviously the Dow's trading down about 125 right now. If we were to open, what's happened? Well, a little more rhetoric, a little more saber rattling last night. China ordered the United States to close its consulate in, I'm not going to try to pronounce it, in retaliation to the close of the Chinese consulate in Houston. I wonder if they're burning barrels full of documents in Chengdu right now. I'm not sure if they are or not, but that would be kind of funny if they did it just for the sake of doing it anyhow. What else is affecting the market right now? Intel, big number, dropped 13% pre-market this morning after the company announced it's going to delay. It's one of the production of its newest chips that was transitioned. It's moving it to later 2023 from 2022. Guess who's getting a little benefit from this? Check out the chart on AMD. We're going to look at that here in just a little while. They also guided third quarter EPS below the consensus. Everybody was expecting Intel to put in a good number because the stock has actually been putting together a little bit of a turnaround. And we got some decent comments from management earlier in the quarter, much earlier in the quarter here. So from this perspective, this was another disappointment for the market. We talked about the disappointment last night with Microsoft and the fact that there was, and this was on the roundtable, there was a line in one of the news stories that I read that actually pinned it on the disappointment of the high expectations. Even though Microsoft's number wasn't that bad, it was not as good as what the expectations, the speculation, had bid it up to be. That is what we're dealing with this market, folks. Believe it or not, remember that. Put it however you want. If you want to talk about the $10 trillion that's been created in the market, if you want to talk about the 50% rally in the NASDAQ, if you want to talk about the 25%, it's all on speculation that's happened since April, March. And if that speculation does not get confirmed by the fundamentals that are now coming down, you'll have companies like Intel that are going to fall 13%. So there is obviously a question on whether or not you buy Intel at this point. I think that you stay away from it, let it cool off for a little while. Also, don't know anybody saw, but the airlines are really getting smacked around again this morning. Disney announced that they reportedly delayed several high-profile movies. There was a list of them. To be honest, I don't have a child under the age of 20 now, so I don't look at the list of movies because it's not going to affect me. If they started to, let's just say Disney doesn't make the movies that my kids watch anymore. Actually, I don't think my kids watch that much movie anymore. Taiwan Semiconductor, all the semis outside of Intel are going to be popping this morning simply because Intel is kind of saying, hey, one of our biggest, newest chips that was coming out isn't coming out. We're delaying it. So everybody else is going to benefit. I don't think they're going to throw a party because now we got to see how chip demand is going to go down the road. Chip demand's the next thing we need to be watching out for on these companies, because if there's a reason, let's be honest, there's a reason that Intel is delaying that. First of all, they're going to pop a bunch of money in the development of this new chip and the production of it. If it's not going to pay off for them very quickly, then they lose money or they do poorly on their earnings, right? Because you're putting money into R&D and you're not getting that money back in revenue and sales. So this might be one of those moves that you look at, and when you pull it apart and think about it from just the perspective of the company missing or giving us some bad news, it also is part of Intel's management looking and saying, hey, is there going to be demand for this brand new hot chip? And if there's not, we don't need to get it out there as quick as possible. We take our time when we think that demand will be back. And by that measure, and I am just speculating here. Remember, I just used the word speculating, markets driven higher and lower by speculation. But if I am speculating, I look at it from the perspective of Intel may be giving you a little bit of a hint that demand for semiconductors is going to slow down dramatically here, and it's going to stay slow through 2021, 2022, 2023. They don't need to rush to get the newest badass chip out there if there's not going to be much demand to put it into any little boxes. So think about that. There's your story within the story right now. S&P 500 breaks down below that 3250 level. We talked about the possibility of going to 3300. I think we can dash that for the next couple days here. 3200 is where you want to watch, but actually that 20-day moving average at 3150 is going to be the mark. The reason I use a spider, I always use a spider, is look at the volume that's been happening. This has kind of been a dead market, even though we've been going through some pretty big earnings announcement. We've seen some dead activity here. Yesterday was the first day that you saw traders come back alive. RSI is coming off close to an overbought signal. This could be, I don't want to call it the big one, but this could be one, that's for sure, where we get a 5 to 10% move. The next one, the VIX. The VIX crossed one of my lines yesterday when it went up above 25. Now we're moving up to see the 200-day being taken out. The volatility index is getting ready to make a shift. It made its little foray below 225 here for 3 days. Only two of those where we saw a close below 25. Yesterday we closed above it. It may be time, and I'll tell you guys at 11 o'clock, my night trader people, it may be time to add a hedge to the market with the VIX again, and understand that we lost on the last one. We lost some money on the last one, but that is one that will move fast and aggressive. The next one, we normally don't go through 3 charts, we go through 2, but this one's important because it's a NASDAQ 100. Look at the 20-day, folks. 20-day, the NASDAQ 100 has not posted a close below the 20-day since the beginning of April, right here. Sure, we've challenged it, no close. Closed above, closed above, closed above. You squeaked out a little one here in June. We are looking right now as though we're going to dip well below that, and we'll see what happens here over the next day. But in this particular situation, you got to watch this VIX right now. The traders trend line is in play, and this is the one area where the traders have been active. The volume has been higher than what we see on the S&P 500. The NASDAQ 100 is going to tilt the market's hand or tip the market's hand and tell us where we're going. So what else have I been seeing here over the last couple of days? Defensive trades are starting to show some life again here. We're seeing traders migrate more defensive sectors over the last week, which has been quiet. Nobody talks about it, given the attraction of the NASDAQ 100 headlines. So you got Microsoft coming out. You got people talking about Intel. You've got people talking about Tesla. All of these. Nobody wants to talk about boring old Proctor Gamble or Clorox, even though Clorox did a good job on their earnings report, right? So higher dividend yield names. The 10-year right now, back down below, well below 0.6, 60 basis points. Consumer staples, all they've been seeing increase in volume and price, while we've been seeing the dropping of the tech names that haven't seen any earnings call. So volume in companies that are waiting for their earnings calls in that tech area is going to, sorry, I saw a shiny object there about Moderna, which is trading down even heavier this morning. I think you guys know where I stand on Moderna. That is a sawtooth rally, and you pick it up at lower prices. We'll look at the chart here in a few moments. But while the volume's been dropping on the tech-heavy names that haven't seen an earnings. So in other words, companies that are waiting to release their earnings, people aren't buying them up the way they did Tesla and a few other names, not buying the rumor, and that tells you that people are getting nervous. Additional option activity on the VIX is starting to heat up. I saw some huge blocks going off on the VIX calls yesterday on out of the money strikes. That's telling you that some of the larger traders out there are starting to position themselves for that volatility to come back into play in the market, to maybe take that break that we've finally been looking for. For God's sakes, I've been talking about this break for how long? 3 weeks. And sure, the first week or so, or the first 2 weeks was, hey, let's get ready for it. Earnings season starts a seasonally weak period of the year, especially in July. Then I started to act and added puts to my portfolio, and it kind of made me uncomfortable, kind of like going to the doctor when you're getting some sort of exam where there's prodding or poking done, and you're in the waiting room just kind of going, I really don't want to go in. Now, all of a sudden, it's coming to fruition a little bit here. We're seeing the slowdown that normally goes along with it. And this is where we start to say, okay, the trend is truly reversing. Watch the 20-day rollovers and watch the 50-day rollovers on the companies that you're holding right now. That's the best advice I can give you. And also make sure that you've got those trailing stop limits in that I always talk about. So back to the charts, we're looking at the 10-year right now, trading below that 6 or the 60 basis points. You're actually seeing this start to enter a new trend lower, which tells us that you've got people going after bonds. At the same time, you've got consumer staples starting to take off. I like the XLP. For those of you that would ask me what I like to look at right now, not sexy, companies like Hormel, Proctor Gamble, Clorox, staples are obviously taking off, and it has been a quiet liftoff here because everybody likes to talk about tech. There's a chart of Procter & Gamble breaking above 126 right now. And if you look at this company, the technicals right now are favoring a continuation in this run, except for it's a little bit oversold. Procter & Gamble is one of those that will just be the tortoise in the race. So it'll come down off that oversold reading. Volume picking up on the stock. This is a great one to look at for the second half of the year, and it pays a dividend. Next is Kroger. Kroger company is coming back, broke through that 34. We spent a lot of time trading between 34 and 32. Finally see an increase in the store traffic again. One of the reasons is everybody's getting a little more concerned about this second wave of the coronavirus. And it's only going to get worse as we start talking about how in the cooler weather, and I'm not talking about cooler weather yet because it's still going to be blazing hot here in Cincinnati today. But when that weather comes, we get that second round, that true second round. Right now, my target on Kroger is $44 on the grocer. They continue to grow not only organically, but through acquisitions, and they are doing all the right things with their supply chain. So dividend yielders also are starting to pick up right now. You get about 3.5% by buying the DVY. This is one of those, it's a slow mover. If you're buying this, you should be shorting shorting the dollar. You should be going long gold. You should be going long silver. These are all defensive plays. Let's talk about very quickly the gold and silver trade right now, because we talk about that quite often and hedges in the market. You know what? Here is Barrick Gold, but let's take a look at gold, the actual GLD. You can see that we saw this run up right now into overbought territory. This tension with China is going to maintain a bid on gold as we continue to move forward. We're also seeing that weakening of the dollar. I'm looking at the UDN here, which is a great hedge against the dollar going too low. Excuse me, it's a hedge against the dollar continuing to go low. I think everybody's in agreement that the dollar is going to be heading down towards, some lows as we head into the end of the year. So in other words, the trend right now, and here is the actual dollar UUP, is the dollar index, UUP, not UP. UUP is the index that tracks the dollar, the ETF that tracks the dollar, and you can see the trend firmly in place here. The UDN is your hedge against that, and this is just a nice, slow, easy hedge. Actually, if you check out Fast Profits, I gave this recommendation 3 or 4 weeks ago, along with some calls on it that looks at the playing a January call on UDN, and you just go at the money on these type of calls and let them go. It's a stock substitute. Not that you have to substitute much for a share that's only trading at $21. Letting me get back to the slides. As I said, I got to keep things moving today because I need to send some stuff to my night trader people right after the open up here. So last night's earnings calls, man, I missed one. Yesterday, I gave you guys 3 different calls: Mattel, Boston Beer, BJ Restaurants. BJ Restaurants beat by 60 cents. Inline revenues. I'm going to show you something on how I think you play this, though, in a minute. So I thought that I really did when I looked at it. BJ Restaurants, lots of overhead, larger restaurants. And as a result, I thought there'd be a little more pressure on these names. And there wasn't. There wasn't. Fast Profits is, you can look at it on moneymorning.com, James. It should be up in the top left or right-hand corner of the website. And this week's is out there as well, the newest one for this week. So I missed it on BJ Restaurants, saying that I thought we'd see a miss. The company's trading up about 11% in pre-market trading. They beat by 60 cents. Reported revs in line. However, Mattel, I nailed it, lost 26 cents per share. 8 cents better than what the expectations. So they beat expectations, and revenue did fall, but the company came back and talked about how they are working on their huge lines. You know, they've got the American Girl, they've got the Barbie, obviously. That the company is actually trading up about 3% in after hours. Mattel is a company I think you look at holding here for a while as one of those almost consumer staples, even though it isn't. It's more of a discretionary, but anybody who's got a 3 or 4 year old child, tell me that a Mattel toy is discretionary. It is a staple. Boston Beer Company beat by $2.46. We're drinking a lot of beer. Oh, by the way, happy Tequila Day for you guys. Happy Tequila Day. I'm not going to tell you, you can figure out where it is at 5 o'clock. Actually, it's 5 o'clock in London right now, right? No, it is not. That'd be at noon. You figure out where it's 5 o'clock whenever you want to figure out that it's 5 o'clock and enjoy a tequila safely if that's what you want to do. But happy Tequila Day. People have been drinking a lot of beer with that tequila, though, and a lot of Boston beer here. 246 they raised fiscal year 20 guidance. I told you 3 weeks ago, when you start to see companies raising their guidance, that is something that tells you need to pay attention to that company. Boston Beer is a great hold, I think, for the next 3 months. We'll look at a chart of that as well. I'm doing something different this morning, too, with you. We're going to look at some gappers. I'm going to look at some retail companies because retail has been in the focus here, but I'm going to look at some gappers. Who's gapping today? Tesla, gapping lower. Last I saw was 6%. It's going to be more than that. The stock is coming off of its post-high or its post-earnings bubble. We obviously saw a run up ahead of this. We're seeing the company come back down again. I think we see a print somewhere around that 1,300 level, takes out the 20-day moving average. That's where I'm looking for Tesla to go, maybe even down to that 1,200. I'd love to see a print at 1,100. Nonetheless, it's a gapper that's reversing course. We're seeing a regression to the mean. The traders are going to start to get out of some of the high flyers, and Tesla, my God, is one of the highest flying out there. Moved down 5% yesterday. Expect to see another 5 to 6% today if you go look at what my expectations for, and we're going to see that 20-day come into play right away. So, gapper, do you hold it, buy it, sell it? Right now, let Tesla have some room to move a little bit lower. If you don't have it, if you got the stock, you should have had a trailing stop in on it. And hopefully you got out when it came down to that 1,500 level. Normally you'll see support there. Keep in mind the 100 levels are going to give you some support, but the one that's really going to stand out here, 1,100. 1,100 is where I'm looking coming off this way, way, way overbought situation. Now, one of my favorites as a result of Tesla, a lot of connected companies coming down, a lot of alternative battery power, alternative energy companies coming down because Tesla's coming down. And this is in relationship to Tesla. Plug Power breaking below its 20-day moving average right now, and it's going to break through the 850. The stock is traded last I saw 6% lower pre-market. Watch for a 750 bid on Plug Power. This is one of those companies that, again, has done a great job of acquisition over the last couple of months. We see this thing sawtooth, though. It is one of those companies that's on the Robinhood list. In other words, that list of companies that I watch that really sees if you will, a rally and a pullback based on Robinhood. The Robinhooders love this stock, so expect to see the selling become fast and furious. Here's where they were coming in and buying this name when we started to break up. This was also a short squeeze For those of you that watch the short interest ratio was 6.5 when we were right around in here. The trigger price was about 570 for the stock for that short squeeze to kick in. And boy, did it, taking it up to $10 right now. See that unwind. 750 is the first level I start to look at, and 650 is where I can't stand myself if I don't start buying shares of Plug Power. And another one is Mattel. Just because of that, we're gapping higher 3.5% on Mattel above the 200-day moving average. We've got the 50 and the 20-day coming up, and we're trading on good volume because of the earnings. A little bit overbought right now, but this stock has got a $15 right now, and that's a year-end target, $15. I like Mattel. If it gives you a pullback to the 200-day, which is $11 off that overbought, that's a place to put the limit order in. And AMD, I mentioned, up 6.5% right now, down 4% yesterday. You can see AMD has been making a great move. The 20-day is confirming the 50-day right now. AMD is going to overtake that $62 mark this morning. This is on news off of Intel. Heavy volume's been on the stock, obviously earnings related. But at the same time, AMD was already pushing forward with the other semiconductors, is starting to take a little bit more of a leadership role. The other leader that is out there, let's go to the chart, is NVIDIA, NVDA. When we look at the semiconductor sectors, we think of NVIDIA sitting on its 20-day right now. It's been doing a lot of consolidation here for the last couple of weeks. Watch NVIDIA to pull back a little further. They're not going to be as affected by the Intel news because NVIDIA is more of an innovator, and at the same time, they are out there. They're the small boat in the harbor, if you will. They can move around and make changes very quickly. They're down 2.4% right now, 2.4% on NVIDIA, which puts it around 395. So you're going to see it trading just below that 20-day moving average. 50-day moving average is going to come in for support on NVIDIA, is what my chart intuition tells me. I talked about silver and gold real quickly. Let's mention those. Silver overbought right now. This is one where I think we'll see the silver trade kind of pull back a little bit. SLV. My fast profits trade this week was to not only grab silver, but also wheat and precious metals. Wheaton is pulling back below 50 at $48. I think Wheaton turns into a buy, and at the money option or even the 50 strike with looking out to January is what starts to look very attractive for Wheaton. This is a long-term hold. The stock is in an overbought signal right now. And again, this is right there. You can pull up the fast profits trade that I put out earlier this week, and it'll walk you right through it. But we're over that 50-day moving. I'm sorry, the overbought signals right now on wheat. It's had a heck of a run here, as has silver. Everything needs a rest like this. If I go up the flight of steps too quickly, I need a little bit of a rest. That's a flight of steps right now for silver. So watch as we see maybe a little bit of a pullback here. At the same time, these tensions with China are going to put a little more pressure. I mean, it is trading up 30 cents higher in pre-market, so it's up 1.43%. You may not get much of a chance to grab this one before it goes up to $23, $24 and then makes a bigger pullback. This is gone parabolic. And when I look at gold, there are two trades that I like in that gold trade right now. It's Barrick Gold. When I look at the big miners, GOLD, this is a stock that we've traded in Night Trader twice now. Look at the 2705. But again, you're going to get a pop in Barrick also because of gold prices going. Let's see how that's trading in pre-market right now. Yeah, trading up 1% right now in the pre-market. And then the other one is EGO, Eldorado Gold, EGO, smaller miner here. Faster moves. $11 is the support that I'm looking at for EGO right now. The stock, as we've seen, has been going through the roof. It's up about 1%, trading at 1162 this morning. So that should cover your precious metals. If you're looking at we'll hit a couple of the really big tech names here in a few moments because those are what are getting sold off. Let me finish some slides here. Ballard Power, we don't talk about that much. BLDP, same category with Plug Power. Seeing a pullback here, and this pullback started along with Plug Power. It's gotten overbought. You can see the overbought readings here. $14 is the print that you're looking for in terms of a buy on Ballard. And it is trading right now somewhere, let's see, it is trading right now $15.12 in pre-market activity. So another dollar or so, so another 7% lower, but the limit should be looking at somewhere around that particular point. Now, I get asked a lot about, and let's talk about, as I got my final slide up, this is where I can go a little bit off script for you here and start to really give some information. There's holding risk with the weekend that comes up, that whenever we start talking about holding risk, it's time to start talking about hedges a little more. And obviously the first round of hedges is having those trailing stop losses in, so that when your profit, your trades, all of that money that you've made on, whether it's Tesla, whether it's Netflix, whether it's Intel, over the last 3 months, you don't have to worry about trying to make that decision on where to sell it. That trailing stop does it for you. The risk right now with the Chinese saber rattling, obviously this is going to increase, and we're going to start to see some of this flow over into the marketed individual stocks. When we look at them, the first part that I'm looking at, or the first area of the market that I'm looking at, and has been one of the weaker, are the financials. For months, I've been talking about trying to go out there and actually leverage or hedge, if you will, the financials. And believe it or not, the financials are trading flat right now. There were a few banks that came out this morning that were, I'm trying to think of one. Give me a moment. It wasn't US Bank Corp, but we had some earnings news that wasn't terrible. And the financials haven't been terrible. They haven't been that bad. But you see the XLF is starting to level off a little bit. Always does it 2 weeks after earnings. And that means you can start to hedge that by using those SKF shares. This SKF share has been beaten up since I first started talking about it in April. If you look at it, you guys know I'm always the first one that'll point out when I'm wrong, I think here. 14.50, let's say you got in and it's trading down $11. So $3 off the 14.50, that's 20% roughly that it's trading lower. We've been forming a bottom here around this $12 level though, as the XLF has started to show some signs that it is leveling off again. And that movement, that 20% down, goes along with an increase in the actual index of 50% here at its top. So the SKF still looks like it's an attractive hedge against the market right now. There are other very basic hedges that are going to work as well. Everything from using the VIX, hedges against the VIX. You can use the VXN, which is one of my favorites to go out. This is a short-term ETN that trades a bearish side of the VIX here. The VXX, I'm sorry, guys, is your actual VIX. Excuse me. So your VXX is your VIX. And that's an easy way just to buy an ETF to protect yourself on hedge against volatility. You can buy that around $30 right now. I think at a market price of $30, it's going to follow what happens with the VIX very closely. A break above the 50 and the 20-day. It's going to take you to a spike of 44. 44 from 30 gives you a 50% move roughly. That's a nice volatility hedge. Nice volatility hedge. Nice volatility. And especially when we're seeing some signs that some of the froth might get knocked off this market. People are asking about the Chinese market, down 5% last night, 5% in overnight trading. Now, let's extrapolate this a little bit, because this is also the market that we saw go through the roof 2 weeks ago, because everybody's investing in China the same way. We've got a Robin Hood era here of investing here. But when we start to also introduce this rhetoric or this saber rattling. Let's go to the screen here so you can see as I'm going off on my little soapbox for a minute here. When you do start to introduce this saber rattling and talk of trade deals and all of this, remember, they started talking about delisting some of the companies like Alibaba, Baidu, et cetera, et cetera. That's a dangerous game that we start to get into when we start suggesting that this could happen, and whether or not the exchanges actually take those ADRs off of their off of the market is a big decision. It's a huge decision. It's us saying we're going to close the United States market to capital for China right now. Obviously, it's kind of been put on the table just through suggestions, but suggestions to actions are a huge difference right now. And in a political year, when you've got a presidential election, that would be a mind-blowing move to make. That would be a really big one. So when you look at companies like Alibaba and Baidu right now, these are companies that have been flying high because not only have we been buying into those, but you've got Chinese investors that have been buying into them. I look at Alibaba and I own shares of Alibaba, or I did own shares. I got stopped out of this stock because of the activity that we've seen up at the top of the recent range here. This is one of those just schizophrenic, trying to make it something happen, but something's not happening type of activity with heavy volume. And what I mean is huge rally, and this is where we saw all the news about China and everybody's opening accounts in China, and then we get a pullback again, and then we get another jump back higher, lower highs here, and we're seeing that old-fashioned pennant play around 250 turns into this if you will, battle zone for it. And the problem with it is that you're right now, let's check it, you're right now 10% from the first real support of the 50-day. A stock that's this volatile isn't going to fall on the 20-day and bounce right off. You got to look at the 50-day, and that's exactly what happened here. Look, we're slicing through 20 days here. This is one that's just, these, Baidu being the other that I'd watch simply because of the popularity of these Chinese stocks. Baidu also trading down below that 20-day, and it's going to take off through that 50-day. A little more dire chart with Baidu right now. In other words, somebody asked me a few weeks ago, or maybe it was even last week, do you look at playing the Shanghai market? I don't like to play a market that I can't put my hands on the newspaper that gives me the news. And the newspaper, not the internet, because the internet's full of all kinds of news. But if I can't put my hands on a Wall Street Journal or a Barron's or a New York Times or something that tells me about the market, then I try to shy away, because you need information. Markets are driven even more so by information and headlines right now. And I think that's part of what we're seeing with China and these stocks. And I think the volatility is going to continue. And I think that we're probably going to see them lead a little bit lower here. So let me finish up my notes here, because we're right at 9:17, which is when I said I'd give you to it, because I got to go to work for my night trader people. So let's take a look. Next week represents the heaviest flow of earnings for a week this earnings season. The last half of the week didn't set a great tone. This week didn't set a great tone. I'm expecting to see that roll over. VIX is on the rise. Look at a volatility shift that can be fast and aggressive and shoots us up to 40. You can play the VXX as a hedge there. You can also play options on that. You choose how you'd like to play that. I can't give you the individual advice. I'm just pointing out that I like the VIX to move higher here. And the QQQ breaks its 20-day for the first time on a closing basis since April. That's going to be huge. That's going to be huge. So I think you have to watch this. To answer the question that you just asked, yes, the SKF is an inverse ETF of the XLF. So those are my points. In other words, I think we see some selling that takes us through this, through the trading session today. And I really do think that this is probably something that is going to carry over. I'm going to look at the Q&A real quickly. There are 12, so there's no way I get through them. But what time of day do I do my personal trading? I do it throughout the day. I don't like to trade the first half hour of trading, because that's getting all the orders that have been in the books since last night out of the way. I don't like to do it in the last half hour unless I'm shorting or going with the volatility. And I don't like to open up short-term positions overnight, typically. Where do I see the SLV and gold going up to? I say you add another 10 to 20% to both of those trades before the end of the year. Those are going to be strong, especially as we continue to see that weakness in the dollar. And remember, the Senate just stepped on the gas overnight in terms of the how quickly they're going to turn out this. Initially, they said August. I think they're now getting signs that the economy is slowing down faster than they expected it would, and they're stepping on the gas with the stimulus plan. Therefore, I think that you're going to see that happen, and that, of course, is going to expand the balance sheet and make gold and silver even more valuable, because the dollar is going to be worth less. Thoughts on the IWM? The small cap is right now one of those weird, we're seeing something weird. Small cap has been seeing a push here for the last week or so, and it's because of some short covering that's been going on. But also, I think that there's been some people trying to get in there and speculate. The small cap earnings really come at the last part of the earnings season as a group. When you look at it, there's a larger percentage. So it's not earnings driven right now. It's a little bit of speculation. It's been resilient. I'm looking for rollovers in the small cap before you can really start to make some sort of determination on temperature and where it's heading. Looks like we got the silver and trade. We got all of these through. Somebody just saying hi in the Q&A. I appreciate that. Hi. And what's happening with the online Shopify? Let's take one online retail related stocks right now. Shopify being one. Obviously saw some big action there. You're seeing a little bit of the shine come off of these, whether it's Shopify, whether it's Etsy. Etsy's been trading around 100 and looking to find some support there. Same thing, it's kind of rolling over. This is the shine coming off of these stocks that have been trading at these lofty valuations, and it's a little bit of a reality check. eBay would be another one. Obviously, you could add in Mercado Libre, seeing the same type of sideways to breaking down. You can add in an Amazon and say sideways to breaking down, same chart as Mercado Libre. Imagine that. So right now, watch these online retailers is my point. We've kind of pushed the envelope on valuations from a technical perspective, and I think that it's time for the professionals are taking some money off, which usually leaves the retail investors kind of standing around asking what's going to happen. And they say, well, what the heck, I'm going to start selling. And that's when you get the selling pressure that comes through. Remember Kevin Bacon at the end? I haven't said anything funny today, so I'll say it funny now. Remember Kevin Bacon at the end of Animal House, and he's doing this thing, there's nothing to worry about. Please, no, don't worry. And they run him over. That's the situation you look at when the professionals get out. That's the look that you want. So watch these markets very closely, guys. Next week's going to be a telltale for it. Fauci comment, would not get on plane or eat at a restaurant. Wow. Love that, Dr. Fauci. I really do. I mean, I admire the man. I want to send him a thank you note. I know somebody that works for him up at the NIH, and I've been thinking about just sending a little thank you note and having her put it on a desk or something. Animal House is one of the best movies out there. It was Kevin Bacon, too. I don't know how old he was, but he was a young man. That's it, guys. Time frame on the VIX. You know what? That's a great question. VIX moves fast. VIX moves twice. Like the postman, the VIX always knocks twice. So we move up to 40 on the VIX, and it'll come quick and furious. It'll come back again, and then it'll go back up to the VIX or to the 40 level or higher. The second spike is usually the highest, and that's when you buy in, folks. You don't buy on the first spike. You buy on the second spike. 30 years of watching the VIX is what gets me, little itty bitty tidbits like that. Have a great day. 9:22. Night trader people, I'll see you at 11. I've got to go and write up some notes for you right now about the trades we talked about last night. You'll get them after we open up so I can get good pricing here. And good luck flying, everybody who's flying. Everybody who's flying, please be careful. Wear everything that you need to and then some. Happy Tequila Day, guys. Have one on me. Do it safely. Do it, or have some apple juice if you like. Wish you the best trading success. Look forward to seeing you Monday morning. Bye-bye.